Ever pondered on how Warren Buffett, one of the world's most successful investors, built his wealth? Well, it's not rocket science, but a few simple yet effective strategies and principles. Let's delve into the world of investing, focusing on a popular strategy known as dividend investing. This method involves purchasing stocks of companies that distribute regular dividends. Now, you might ask, what are dividends? They are simply a portion of a company's profits that are shared with shareholders. The primary goal of this strategy is to generate income from these dividend payments, providing investors with a steady stream of cash while they maintain ownership of their investments. The beauty of dividend investing lies in its benefits. It offers potential for regular income, an opportunity for reinvestment, where you can buy more shares with the dividends you receive, and a buffer against market volatility. Companies that pay dividends often demonstrate stability, which is a great advantage in a volatile market. Some prime examples of companies that follow this strategy are Johnson & Amp. Johnson, a renowned healthcare company, Procter & Amp, Gamble, a consumer goods company with a strong dividend history, and Coca-Cola, known for its global presence and a long history of paying dividends. Now imagine you're in the shoes of Warren Buffett. How would you approach investing? Buffett's strategies are simple yet profound. Firstly, invest in what you understand. Buffett advises putting your money in companies and industries that you have a good grasp of, helping to reduce risks and make informed investment decisions. Secondly, keep a long-term perspective. Buffett is a strong advocate for holding on to quality investments for extended periods, harnessing the power of compounding. Thirdly, value investing is key. Buffett is a proponent of finding undervalued companies with robust fundamentals and investing in them for the long term. Lastly, he focuses on companies with solid management teams and a sustainable competitive advantage, as these are key factors contributing to a company's long-term success. So, how can beginners apply Buffett's strategies? Start by investing in well-established, fundamentally strong companies that align with your understanding and have a history of consistent performance. Considering low-cost index funds or exchange-traded funds, which mirror market performance, can also be a good starting point for those who are new to investing. Remember, investing is a journey, not a race. It takes time, patience, and a little bit of Warren Buffett's wisdom. Happy investing!